Alrighty, hello everyone. My name is Zach. Most of you are likely familiar with my voice by now, but for any of us that might be new, joining us for the new year, welcome and happy new year to everyone that has been with us previously and is joining us now for the first time. It's great to have you with us. Great to be back this year. We took a little bit more time on the intro this time to allow enough time for our man of the hour to join, who I see just arrived. So crisis averted, and we will be able to uh, start off this year with an exciting TradeFinder Live. So we'll get through the housekeeping details real quickly, and I will pass over to Mr. Roy. So this is our live disclosure disclaimer agreement. If you've seen any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We have this available on our website, so please feel free to read it in detail there, or take a screenshot of it now if you like, but that's the main point to take away. We have a brief Q&A portion at the end of the session. Most of us are likely familiar with that by now, but if we need any type of review or a reminder on how that works when we get to that portion, please review that slide, and I will pass over to Mr. Roy. I see we were able to join. It's great to see you.
Welcome, Zach, and Happy New Year to you. Happy New Year to everyone. I do apologize for the delay in starting. We've got pretty nasty weather up here in the mountains, and they don't really cooperate so well with technology up here. So we need things to be pretty much status quo. But we're here, we're ready to go, excited to start the year with our first Trade Finder of 2024. So I hope you've had a great start to year, Zach, and I'm sure we'll get to Nvidia. And I imagine you're pretty excited about the last couple of days of Nvidia, so we'll
You are
get to
correct.
that yeah a little bit later on. But let's go ahead and get over to the screen and see where the market is. Let's get caught up from what we've missed over the holidays. So here's where we are with the market. Big up day yesterday, pretty surprising, I think, to a lot because the economic news hasn't been so great. And perhaps that's a good thing. It seems to me that the market is giving the Fed an awful lot of credit here on this whole soft landing thing. I'm still not quite sure that I'm ready to anoint them as manufacturing the whole soft landing. I just feel like they're going to be late to the party on the rate cuts. Perhaps the market will be a little bit disappointed, and maybe we have to deal with that later on. But for now, we had a bit of a retracement here. Move back to the upside, still in the wave three, so just a little mild correction here. The important thing, as we take a look at the chart, I talked about this over the weekend in the U.S. market update on our Ewo channel on YouTube. And if you haven't subscribed to it, please go there. It's Elliott Wave Options channel on YouTube. I talked about how at the end of the year, we had moved to the upside and the lows were kind of following along the 10-day moving average. But then as we started the new year, it was the highs that were touching the 10-day moving average as we traded below the 10-day moving average. And then yesterday, boom, big move to the upside. If we bring volume on, the only thing that you can complain about is although solid, still below average volume on the move yesterday. And then a little bit of a kind of a slight pullback today, nothing too significant, especially with the big move that we had yesterday. And the fact that it was on lower volume today, you would still feel that that's constructive. I would have liked to have seen maybe just a touch above average volume, but maybe that's being a little bit too picky. The market doesn't always give you exactly what you want. So for now, we are happy to be back above the 10-day moving average. Note that we touched it on the low today, which happened to be the open. And another thing that I wanted to mention, I talked about this in the weekend update as well. There's a lot of, and this is something that I've noticed over the years, is we have the Santa Claus Rally that you hear talked about all the time. That's the period of time between the Christmas holiday and the New Year's Day holiday. There's nobody there. There's no traders. So the market tends to drift up during that time frame, hence the name Santa Claus Rally. And one of the things that I've noticed is when you have a drift up during that week, when the traders all come back at the beginning of the year, the market tends to retrace and move back to the downside. It's like the traders are like, no, 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 you can't have those gains without us. So we got to push it back down. and then we turn to move back to the upside. So to me, the Santa Claus rally kind of started right in this area here, around the mid-December, 13th, 14th, so far, so somewhere around in that area. For the Santa Claus rally, and then we gave most of that back. I would have preferred to seen this little bit of a pullback. I would have had more faith in it if we'd have come down here to the 460 level, also where the 50-day moving average happens to be, but we didn't come down quite that far. You have to trade what the market is giving you. And so far, it's telling us that it does want to come up and try to test this wave 3 high. Can we get above it? Well, we'll let the market tell us whether or not we can break above that wave 3 high and perhaps continue to the upside. Since we have not labeled a wave 4, this is still just a projection here on if we were to continue to correct and label a wave 4. That's where you could expect to find some support, but we're nowhere near that for now. And it looks like the next move again is a test of those wave 3 highs rather than some sort of a move into a wave 4. So pretty interesting start to the year, I think. The first part, not surprising. Yesterday was a little surprising, I felt, and held it in there pretty well today. So that's what's going on with the S&P. Catches you up to date for the last couple of weeks. We look at interest rates. We've had a bit of a bounce. You note that the wave 4 is down here at 71%, very close to disqualifying this 5-wave pattern. And if Mr. Elliott was here, even though he admits that you can keep a wave 4 down to the 78.6% fib level, big believer in fib levels was Mr. Elliott. But once you got to 70% or more, he felt like the majority of the time it would disqualify the pattern, whether you go all the way to 78.6% or not. So I feel like this bounce in rates here was just nothing more than a little bit of a mild correction from this big drop that we had in rates. I don't see anything of significance. It's hard to imagine what could cause any sort of a big move to the upside, like a projected wave 5 in rates. Just, if we saw some significant signs of inflation coming back and giving the Fed a little bit of credit here, inflation is kind of in the area of where they said they wanted it. Certainly has come back a little bit, but I don't see the type of inflation that would cause rates to move all the way back up and go anywhere near that wave 5 target. So I feel like it's just a matter of time before this 5-wave pattern becomes disqualified, and we look to see what the algorithm has in store for us regarding rates from there. So we'll just look at good old-fashioned support resistance areas. Perhaps we could even bounce up to 4.2% on the 10-year here. Maybe we move up there. We have a little tiny triangle here that's forming. So we're going to get some sort of a small move in rates in the next couple of days. But as I said, it's a real tiny triangle. It's only about 1 point or so. So this isn't going to be any sort of a significant breakout. Perhaps that's enough to break up and test this resistance area, or maybe we head lower from here. As you know, with a symmetrical triangle, it can break either direction, as is true with any triangle formation, and perhaps we break to the downside and disqualify once and for all this 5-wave pattern, and we don't have to just think that that's what's coming, that it actually does occur. So real small triangle here as we are trading below the resistance area on interest rates. Certainly the tech stocks caught a little bit of a bid today. Talked about Nvidia in the beginning, and we'll get to that a little bit later on. Here's the dollar. If we put the Elliott Wave pattern on here, the interesting thing about the dollar is we went right to the 38% wave 4 corrective level, filled this gap. So talking about filling gaps, as you know, big believers that gaps get filled, because that's what our data shows. At 94% of the time, gaps get filled. It's not 100%, but it happens the vast majority of the time. And look at that. We went right, even on the dollar, straight up. That bar closed the gap. And then we've just kind of consolidated over the last couple of trading days on the dollar. And this is the sweet spot, in my opinion, for the dollar, staying around in here. The low that would concern me would be a dollar breaking below 96. That goes way back. That would start to mean to me that countries globally are starting to be concerned about the amount of debt that we carry here in the U.S. and maybe the dollar is not the bastion of last resort, the currency of last resort, if you will. We can move a little bit higher in the dollar, I think, and be okay. Obviously, we were all right here in October when we went all the way up to 107. So right in this range here, staying below those highs and above that 96 level, anything in this range is constructive for the market, in my opinion. If we start to break too much to the upside, then you know how it works. So many companies are global now. The currency exchange rate affects the bottom line. So if we move too much higher in the dollar, two things there. One, I think it kind of hints that there may be a bit of a global recession underway, and money is flocking into the dollar to hide there. And then it would also be very tough on tech stocks to rebound and move to the upside if the dollar were to continue higher. As I'm sure you're probably aware, tech stocks took a bit of a hit. Most of the Mag 7 stocks, and gosh, as soon as they started calling the Mag 7 the Lag 7, it's amazing how the media has to have their little taglines. The Magnificent Seven. So calling them the Lag 7 is almost like Nvidia said, "Oh yeah, watch this," over the last two trading days with this big move back to the upside. Anything short of a big run back to the upside in the dollar, perhaps those tech stocks can other ones can say, yeah, not so fast. Don't count us out just yet. Yeah, there's been some market rotation, some money has been moving around, but it doesn't mean that that whole tech story, the AI base and everything else is going away. Clearly, if you've been watching Meta, et cetera, you're well aware of that. So I really like where we are with the dollar now. A fly in the ointment for the upward move is on the VIX, right back down below 13 again. And you know, we come down here as we've talked about numerous times. And when we come down here, going back to last year, every time we came down here, we had a bit of a bounce in volatility, which normally coincides with a downward move in the equities market. Small bounces here in December and a little bit to start the year. And a lot of people were saying, all right, here we go. I did expect some more volatility in January, and you know we're only on the 9th, so we still have plenty of time to see more volatility in the month. We have had a little bit more, but not much, very ever so slightly to the upside here. And we've got a pretty tiny trading range here on the VIX in this 13 to 14 range, which is pretty interesting. Are we going to be able to break down below here? Are we going to be able to break below that level on 12? We do have a wave 5 target down below 10. We've been there before. It is unusual, but it's happened before, so it wouldn't be the first time. But I kind of think you got to keep your eye on the ball here over the next few trading days and see what happens with the VIX. Can we break below 12? If we do, then yeah, we're probably going down at least towards 10. But right in this area, call it 12 to 14 instead of 13 to 14. But right in here is the trading range that the VIX has kind of hung around in. That gives us a little bit of an idea of what's occurring in the markets. So some slight volatility to start the year, and then right back down in the VIX. Pretty interesting stuff there. We hadn't looked in the DIA for a bit here, so let's go ahead and catch up on where it is. And just a really strong wave 3 to the upside here. Good consolidation. If you want this to hold, it's just towards the 45 degree enough to where that can hold. You know, one of my rules, I don't like it when things go vertically because what goes vertically up often comes vertically back down. That's not a vertical move. It's pretty darn close to 45 degrees. That's what I like to see. Those moves tend to hold. We know the market goes through impulses and corrections. That's the crux of Elliott Wave, identifying those. So we go up, we go down. But when we have a 45-degree angle, the corrections seem to be less severe and the moves tend to hold better. When you go vertically, you get stronger corrections, and that's why they come back down after vertical moves. Not so much here on the DIA with the 45-degree angle, closing just above the 10-day moving average here on today's close. Pretty solid movement there. There has been, or at least was, some movement, obviously, currency movement, money movement into the DIA. Some people wanting some bigger companies, more solid, stable companies going into the beginning of the year to see if we were going to have some sort of a recession. It's a good place to park money in the Dow. And I think that's what happened going into the end of the year. So far, not much of a correction there. So money is hanging around. Let's take a look at the Qs and we'll see that they had a pretty nice bounce, as you would expect. Back above the 10-day moving average yesterday, a bit of confirmation today. So if you're bullish on the tech stocks and you're not a believer in this whole lag 7 thing, you're pretty encouraged to see that move back to the upside. 44% wave 4 correction, got just past that 38.2% level, almost down here to this area of support, got in the neighborhood there, as you can see, before bouncing back to the upside with the S&P. But you really want to see that the Qs can break that wave 3 high to look for a potential move to that wave 5. But it's nice to see that the wave 4 is labeled here on the Qs, where again, as a reminder, it has not yet been labeled on the S&P. So if we take a look at the IWM, small caps. A lot of people, as we've talked about numerous times, look for small caps as an idea of risk on, risk off. And gosh, we had that big run the upside there, came back and filled this gap here on the IWM from December. We're trying to bounce, not able to recover the 10-day moving average just yet, though, on the IWM. So that's something to keep an eye on. The question is, can we hold 190? If you remember going way back, the trading range was between 190 and 210 on the IWM. Then we broke below 190 and we traded between 170 and 190 for a while, able to break back above in an emphatic way here on the 13th of December, above that 190 level, got above that previous wave 5 high. A little bit of a pullback here, again, just filling that gap. And we're awfully close to a 38.2% correction in the wave 4. Got in the neighborhood of 50-day moving average, not quite down there. Again, I would have been more comfortable with all these markets coming down, testing the 50-day moving average and bouncing up. I would have had more confidence that this move can continue. Perhaps it still does. The market doesn't really care what makes me comfortable. So you got to trade again what the market's telling you. However, if you want to look for an entry on the IWM, I think you got to wait until you get above the 10-day moving average with a follow through. And then perhaps we have a run up to that previous wave 3 and see if we can break above that. Note where that wave 5 projection is, not too far above that 210 level. That was resistance going way back, as I mentioned. I find that pretty interesting. So we're down in the neighborhood of 190. Perhaps that holds and we make another run up towards that 210 level. But first things first, got to get above that 10-day moving average first. And gosh, the news, I'm sure all you Bitcoin fans have been glued to watching this. If you were following along with the financial markets after the close, there was what's called an imposter post by the SEC that the Bitcoin ETF had been approved, which we're supposed to find out about tomorrow. And the chairman of the SEC came out and said, that's not our post. That's not a legitimate post. And you can see what happened. Bitcoin moving all over the place here, but trading in the area of 45,000, even at the time of this recording. So hanging in there pretty well. And of course, there'll be some anticipation. Now, the thing with Bitcoin is there's a bit of a back and forth on, is that going to propel Bitcoin into the halving that comes in April next year? Or is there going to be a buy the rumor, sell the news thing and Bitcoin corrects a bit more on the news if the news does come out that the SEC approves the Bitcoin ETF? So some news on Bitcoin around that, but awfully good support there now, has built at 44,000. So if you want to be long Bitcoin, as long as it stays above 44,000, I think you can be comfortable there. If it breaks 44,000, then you have to be willing to bear the brunt of a move back towards 40,000, somewhere in this area where we had this bit of consolidation, although slightly higher bias in October and November before we had the break above there in early December. So history has said that when this kind of thing goes on with Bitcoin, with the halving, we didn't tend to move higher. So 50,000 plus looks like where Bitcoin wants to go. The Elliott Wave algorithm thinks that, but anything can happen. Maybe the SEC surprises. Most people think that they are going to approve that ETF. If they don't, what does that do to Bitcoin? Does that bring it down to 40,000? Does it get worse? We'll have to see. Does it affect it at all? You would have to think that it would have a bit of a negative effect, but how strong would be really interesting to see. So we'll be paying close attention tomorrow, as I'm sure all of you crypto fans will be as well, as to the official statement from the SEC that is expected tomorrow. Nobody really knows exactly what time they're going to do it. I'm sure they're pretty angry about this quote imposter post. We'll see how it plays out in tomorrow's trade, but we'll certainly have a lot to talk about with Bitcoin in the crypto world in next week's TradeFinder. And for those of you that are subscribers, alert subscribers at ewotrader.com, we'll be talking about it Thursday night in our insiders meeting for sure. So you'll have an opportunity to see how the market reacted, what happened about that move in Bitcoin. All right, so before we go too much further, I do want to show you a chart of coin because that is tied in with Bitcoin. As you know, we've been just putting them together because they're kind of attached at the hip. And so we had this big, huge run. And look where we corrected to, right to the 38.2% fib level, and just a nice sideways correction here on Coinbase. Perhaps that run preceded a little bit what could come out of the news for Bitcoin. I don't know that if we continue up into this wave 5, it is nice that the wave 4 is labeled, that we have any sort of a vertical move like that, but we could. But if you're long Coinbase and you got a strong stomach, I think you have to be comfortable as long as it stays above 120. We could correct down that far. Perhaps we don't, but that would be right around a 61.8% correction. It also would be support from those highs back in July. Maybe we don't get there, but if you want to put in this Coinbase space, a stock that more than doubled in just under 2 months, you have to be prepared for some give back as well, I think. Is that it? It could be at that fib level 38.2, but we'll see how that plays out. Now, I mentioned in our Friday live show, and I talked about this also in the U.S. market update, we have some exciting news here for TradeFinder. We are going to move TradeFinder to market hours on Tuesday. A lot of you have said, gosh, I love watching the recordings. I just can't see it at night. We've had good response to our live shows during market hours. So we're going to move TradeFinder starting next week to trading hours. It will still be on Tuesday, but it'll be during trading hours. Now, Zach has created a poll, I believe. Zach, if you've got that poll ready, we're curious as to what time you would prefer. So we're giving you two choices. 11 o'clock a.m., which would allow us to watch the open, see how the open played out. Many of you may have heard the old adage that the first hour of trading is amateur hour, and then the real trading starts, and the last hour of trading is when the professionals trade. So that would catch the market open and a little bit of time afterwards to see how things settled out after the first hour, or early in the afternoon, and we can see how a good part of the day is traded, and as we start to look towards the close of the trading day. So what would you prefer, 11 a.m. or 1 p.m.? So we're bringing this to you. We want to know what you guys think as far as what time preference you would prefer, leaning more towards watching what happened on the open, or where we may be headed towards the close. So excited to bring you live TradeFinder during market hours, and so we can talk about what's going on in the market. So let us know, cast your vote, and we will follow along with what the majority wants. Doesn't matter to me one way or the other. I'm watching the markets during the day anyway. So whatever time you prefer, it's good with me. So just want to see what everyone else would prefer. So that's the poll that you have. And again, we're excited to be moving TradeFinder to market hours. A little more appropriate to see what's going on throughout the trading day. Right. So as we move into looking at our case study considerations from last year, we had Apple that we looked at back on the 5th of December, and we were expecting a bit of a move back up towards testing these previous Wave 5 highs and maybe even moving up to 200, that round number there that tends to draw stocks to it. And that's exactly where we went. So if you didn't exit, then you missed our target. That's what we thought was going to happen. It's exactly what did happen, and that should have been your exit. And since then, as you can see, a big corrective move right at the 61.8% fib level. So if you didn't exit then, when you should have, then perhaps you'll get another shot here. Maybe that wave 4 holds. Not only is that at the 61.8% fib level, it's also right at an area of strong support there at 180. And so far that's held. We've bounced back up, still not above the 10-day moving average on Apple, but we do have this gap that needs to get filled. So you still should have a bit of a trading move here, if nothing else, up to fill that gap somewhere here just above 190. But we're going to call this one a winner. We won't look at this again because it did exactly what we thought it was going to do. Talk about the whole Star Trek. My dad was a massive Star Trek fan, was always on the TV. We always heard about the tractor beam effect, and that's what those big round numbers do. They draw stocks to them. It's exactly what happened, exactly what we thought was going to occur. So that's a win on Apple. So we're crossing that off the list. And then that leaves, we looked at ASO back on the 19th of December. Academy Sports, little bit of a vertical move here, granted. And let's see what's happened since then. It did continue to move to the upside. It's pulled back a bit. So our entry point here was at 63.56. The wave 5 target was at 70. We got awfully close there, trading currently at 63.99. So still a little bit above where the entry was back on the 19th. But once again, you had a pretty darn good move here. And if you're still in it, then we're still labeling wave 3 here, trading just below that 10-day move. Vertically right back down. Sometimes it happens in big moves, sometimes it happens in small moves, but holding right in this area of 65. And if you want to stay long Academy Sports for a little bit longer, I think you can feel comfortable being long Academy of Sports above 60. Anything above 60 still looks pretty good. If it breaks below 60, then we've got this gap down here below that will eventually get filled at some point, highly likely, as you know. Doesn't have to be right away. That's the crux with gaps. They get filled an extremely high percentage of the time, but they don't always get filled right away. Sometimes they do. Sometimes it takes a while. But maybe we continue higher. I think it's going to determine the consumer. We went through the holiday season. We had that big run there. Perhaps that was it. So it was an awfully nice move. We like to have 10% moves out of the stocks. So we went from 63 and change to a high of 68.50, awfully close to 10% there. So I really feel like we call that one a winner as well. If you followed along with that, you had a good opportunity to get out here on the 2nd of January with a pretty darn nice gain. So not a whole bunch left to look at as far as our case studies. Wrapping up 2023, another great year of our case study considerations that we look for here on TradeFinder, and now we'll be doing it live. Looking for case study considerations during the market hours, which will be pretty fun then, because we can see what's been going on throughout the trading day for potential candidates. So we can look for them and then see, hey, this is what's going on in this trading day. So pretty exciting stuff moving forward. I think you would agree. So it looks pretty impressive there on the move. So the two that we had before the holiday break performed extremely well. Now let's see what we're looking at for moving forward to next week and the weeks beyond. There's one stock here. Let's see what that is. NVO. Gosh, this one shows up a lot. Have you heard me talk about this in the past? This stock shows up so often. It feels like if you've been listening for a while and been watching us for a while, you know that I talk so much about Google being my favorite stock because it just seems to have Elliott Wave patterns day in and day out almost, it seems, quite often. Very tradable Elliott Wave patterns in Google. I've put more trades on following Elliott Wave on the stock of Google more than any other stock. But man, this one shows up a lot. They used to have a problem where there was no liquidity, but it's performed a lot better. It's got a lot more liquidity than it used to. And boy, if we take a look at our confirming indicators, I'll bring the DMI back on. Pretty solid volume there, as you can see today. Nice up day, closing on the high of the day with right on average volume. That's exactly what you want to see. So if we put the Elliott Wave pattern on, we are in a wave 5 that's almost to the 100% level. So if there was a negative, that would be it. Look where the wave 4 is. That's why we talk about this stuff all the time. Again, right at the 61.8% fib level. That's my favorite fib level because, in my opinion, that's the strongest of all fib levels. And when you get a wave 4 correction right to the 61.8% level, it's a pretty good entry in a 5-wave impulse pattern. It's a great entry on zigzags as well. So we've had this nice move to the upside here. Lots of impulses and corrections here. So once again, a stock that you have to have a bit of an iron stomach to trade because even with these big moves to the upside, it has significant corrections. And that's what happens when you have these vertical moves rather than a nice 45-degree angle move. Interesting thing here is the larger pattern, if you take away from the intraday stuff, is kind of been on a 45-degree angle. But all the short-term stuff is all vertically up, vertically down, back and forth, and all that stuff. So, yeah, you get these big moves to the downside. Should I get out? Should I stay in? So the issue here now, since we're right at the 100% extension, is could we look for this to go to the extended level? And the next level would be 161.8% extension. 100% extension is what's supposed to happen. We got awfully close there. So then we come in and we look at the DMI to give us an idea. What is the likelihood that we're going to have an extended move? If you have a developing DMI like we have here, you would think that the DMI is then supportive of a continued move higher. So we could see that wave 5 break the 100% extension and perhaps begin to trek up towards 161.8. The ADX has moved up nicely. It's above both 20 and 25. I'm a little bit more aggressive, liking the ADX breaking above 20. If you were to read about the DMI, you would see 25 as the level. But I just feel like you miss a lot between 20 and 25 of the move. But nicely between the two directional indicators, you can see the positive directional indicator trying to curl back up on today's move. The negative directional indicator certainly curved to the downside. So we'll go ahead and make that our case study consideration for this week. So we'll put that down. Our first case study consideration of 2024 is going to be, so today it's going to be on NVO. And what would we look at as far as a move? I don't think we necessarily want to look for a move all the way up to the 161.8% extension. Let's kind of stay with our 10% rule. So we'll set a target of about 115 here on NVO. So we would look to see if we can get a move to continue up towards that 115 level, somewhere in there, and see if that plays out with the move expected move higher on NVO. So NVO, our case study consideration for this week. And before we move to the Q&A, as I mentioned in the beginning, Nvidia. We got to look at Nvidia for Zach, if nothing else. And look at that move. New high today in Nvidia. Big break here. Now, if we go back and look, you can see that there is a pretty large ascending triangle here that had formed in Nvidia. And surely by now, if you've been watching, you know the rules on triangles. I say this all the time because there's misinformation that exists out in the internet land, in my opinion, that ascending triangles break to the upside, descending break down, symmetricals can go either way. I can tell you, with as much work as I've done in triangles over the years, any triangle can break either direction. NVIDIA did happen to break to the upside. And when you get the breakout, good follow through today, maybe a little bit overbought right now, but you had the breakout day and follow through today. So if we pull back a little bit, that's okay because the 10-day moving average is still down here around 500. But you look at the mouth of the triangle. So the bottom is down here around 400 and the highs were at 500. So that's a 100-point move. So we would look to see NVIDIA moving up towards that 600 level would be the expected move. Now, it doesn't mean it's going to continue in this vertical move. In fact, I hope it doesn't because then you got to withstand vertical corrections too. I'd like to see it just go sideways over the next few days, gather itself, and then kind of crawl to the upside at a 45-degree angle. That would be my preference. Again, the market doesn't care what my preference is. It doesn't care what I think. It's going to do what it's going to do. But that would be more ideal, in my opinion. But I think it's highly likely that NVIDIA does make a move up towards that 600 level. So, Zach, I know you have been smiling to start the year. And you're probably also anxiously waiting what the SEC says tomorrow about Bitcoin. So
are
good start to
correct
the year
on
for you,
both
my
fronts there.
friend. And with that, I'll go ahead and open it up to some questions.
All
Got a
righty.
whole lot
Sounds
of
great.
previous case studies to look at. So a few extra minutes here for questions. I'm curious to see how the poll's going, if you wouldn't mind giving us an early reading there.
Yeah, absolutely. I was going to say it's still running. We have 80% participation at the moment, so there's still some out there that are deciding. So I'm just going to let it run for a little bit longer, and then we will share the results live so you can see what the masses have said, and it's not just us changing it to what we want to. So
You'll make
anyhow,
us wait, huh? All right. Be
well,
that
yeah, I
way.
just want to make sure everyone has time to vote, but it was
All
only right
right.
to start out with NVIDIA. Let's go ahead and go over to SOX, SOXX.
Okay. So the semiconductors, and haven't looked at that in a very long time. You can see a pretty nice little small correction on the zigzag there, pretty good extension, and you saw what happened, right? I mean, another example here, what I talk about so often, it got vertical, and then so we had to come vertically back down, retrace that, and now it's going up again, and gosh, if it's not trying to go vertical again, please stop that. If you're long the stocks, you want to see it kind of start to do this kind of thing rather than this vertical up and down stuff. But I did say that I thought there'd be more volatility in January, and so far that's playing out with the big moves that we've seen in a lot of stocks, including Nvidia. But there's the stocks. The key here and the most important thing about this chart is it held where it needed to, right at 540, which was at pretty much the wave 3 and wave 5 high. Obviously, to label a 5, it had to be slightly higher. But here in mid-July, the wave 3, and then a little bit higher than that, topped out on the wave 5 at the end of July and pulled back a bit. And then came back up. Didn't really look at it for too long. Just said, here a day or two, and boom, big break above the 540 level. Tested it. It's held. So if you're looking at it just from the chart standpoint, you would want to be long the stocks above 540. A break below 540 changes everything because then you've got a little bit of potential support at 520. But if that doesn't hold, then it gets a little dicier. So 540 would be the most ideal level. Perhaps it comes down to 520, but as long as it stays above 540, for sure you can stay long. The issue is that the DMI here is a mess. The ADX has been moving down because of that vertical move, and you've had double crossovers here with the two directional indicators. So it's the DMI is trying to sort out what's going on here. And it really needs a little bit of time. That's the negative with the DMI is it's a bit of a lagging indicator, kind of like turning an aircraft carrier in the ocean. It takes a little time to catch up, which is why we like to look at the CCI because that is far more responsive to the day-to-day whims of the market. And we came down here towards zero from the extreme point high, the exact extreme point high in December that we saw back in May. So right up there. We came back down to zero, just a little bit below, which is what's supposed to happen. It's trying to turn back to the upside. That looks constructive from a very short-term basis. So we don't have much information from the DMI. Being long a stock, I do prefer to have the DMI be supportive. We don't have that, but the CCI is in an area where it could hold us at least to a test of those highs at 580 until the DMI has time to get its act together and let us know, hey, is there any strength behind this move? Or is this just a reflex bounce off of support? So that's what I see on the stocks. Stay long as it stays above 540.
Alrighty, let's check out what's going on with CRWD.
Good old crowd strike. And I probably heard the news today. Awfully nice move to the upside there. And we've got a pretty nice little zigzag that's formed here with that move to the upside there, right to a 50% correction, spot on. The issue here is that with these two vertical days that we've had, similar to Nvidia, CrowdStrike is in the area of its 100% extension, which is where it's supposed to go with a 50% B wave correction. We are overbought with a gap. Hate that. Don't like the vertical stuff. Don't like the gap. I don't like the fact that there's separation from the 10-day moving average. If you were long, you love the past 2 days. You're smiling and really happy. But I would say be careful, be cautious, because we might need to come back and test at least the 260 level here. That would fill the gap at least and test those December highs, and then maybe we can move higher from there. I don't think CrowdStrike's done. I just think that it's, if you see 285 in the next day or two, then you need to take those gains and go, I think. But a bit of a pullback as long as it stays above 260, I don't think is negative at all. CrowdStrike is in the right spot. If we look at volume, you can see we had above average volume, he tried to say yesterday, followed through with even stronger volume today. Not quite one of these crazy spikes. So there's still enough potential momentum to push it up to 285. I think the question is, does it do it right away? Again, I think that's an exit, or do we need some backing and filling here from these past 2 days before we run up to 285? But I think in the not too distant future, 285 is in CrowdStrike's future. So yeah, way to pick a stock that was in the news today.
Yeah, definitely a lot of chatter on that one. So wanted to hear your analysis. I'm sure a lot of others appreciated it. Let's go over to actually, I did want to say before I forget, we had a question come in that was more of a comment on preferring no change as the client is in Australia. And we acknowledge that we unfortunately can't accommodate everyone, where the sun is shining in some places, that means it's not in others. And we wish we could accommodate everyone at the ideal time, but we found through extensive research that doing it at market hours is more logical overall and in many facets. So we appreciate those that are continuing to vote in, and we apologize to anyone that it might inconvenience. But just please keep in mind that there's always someone that was also in that boat. So that's my soapbox there, and we will go over to Mr. Softy.
Yeah, and I would also like to add in there, Zach, that remember it's recorded. A lot of people are forced to watch the recording because they can't view it at this time of the night. So if you're down under or other parts of the planet, we've got subscribers all over the world, still have the recording, and you're still going to get the benefit of another live trading session. So when you're watching the recording, you'll hear commentary of what was occurring during the trading day, whether you all picked the 11 a.m. or 1 p.m. Eastern time choices. I should have, I saw you put that in there, Zach. Good on you of mentioning that the 11 and 1 were Eastern time choices. So glad you put that in there. So good old Microsoft, Mr. Softy. I'm glad that you remembered that. A lot of people have commented when I used that before that they hadn't heard that in a while, but that's what they used to call Microsoft back in the day. And unfortunately, I was around for back in the day. I've been around a long time. But what a nice looking support level here, right just under the 370 level. A little bit of a descending triangle pattern, but again, don't necessarily view that as a negative. It can break either direction. If it breaks to the downside, it breaks to the downside, but it breaks to the downside because it's a triangle, not because it's a descending triangle. And I would say you have just as much chance that this breaks to the upside because it has such a strong area of support here. Maybe not. It's going to break one way or the other here. It's not a huge move, so 365 to 3, well, that's 20 points. We're already at 375, so we're kind of almost halfway to the potential breakout. Since it's a descending wedge, the breakout basically gets us up to test those highs from November. So what it looks like to me is there's a pretty good chance that if we break to the upside, we're testing that wave 3 high from November. Now, if we break to the downside, it gets a little dicier there. And that's because this was awfully vertical here, which means that if it breaks this support level at 365, there's really nothing to hold it until it comes all the way down here into the 340 area. So a break to the downside certainly would not be constructive if you want to be long the stock. And highly likely, if it breaks below 365, that it sees 340. So that would be a significant move lower. But we're trying to sneak out of the top part of the triangle. I think we need to see what happens tomorrow here. I wouldn't call that a breakout. It's not definitive enough, but it's trying to peek its head. I'm breaking above that upper trend line there with the lower highs. And again, the breakout pretty much says we're testing that wave 3 high from November. So going to be real interested to see what happens with Microsoft. But gosh, there certainly have been some pretty significant moves here this week, even with what's going on with economic news. Nobody seems to have cared about that little bounce in rates. I think most of the people are in the same boat I am, that that's nothing to be real concerned about. It's just a temporary bounce after a really strong move lower. The market is not feeling like rates are going to go significantly higher. That's where we are right now. So anyway, next one.
All righty. Next one, let's look at LEN.
We want to go into the home builder space here, huh? And it just seems like the sector that never dies. Home builders, they ran up a little bit too vertical for me, but was able to consolidate that move, come down and get in the neighborhood of filling that gap. We got a couple lorries, so at some point in time, we're going to have a pretty good correction in the home builders, but it's not yet. And we're up testing this 150 level once again. And you can see this one's kind of like a blow off top here. See the vertical stuff these 2 days? So we went vertically up here on the 13th, followed that by another vertical move up on the 14th and vertically back down. And that's what happens. It did fill that gap right there rather quickly, and a nice consolidation since then. So you want to watch the 150 level on Lennar. The home builders, we showed the XHB a while back before the holiday break. And I think that a break above 150 with follow through, and who knows how high the home builders can go. It's just in clean air there, but just seems to be the trade wants to die, the home builders. And of course, with rates coming back down, that gave them another little boost from what I was hearing from some executives in these big home builders is they got caught a little off guard. They were kind of paring things back, expecting a correction. And then as rates started coming down, some of the buyers that had been on the sidelines that didn't want to trade out their low mortgages for higher mortgages, whether or not they were upsizing or downsizing, they didn't want to give up that low mortgage rate. But since rates have come down, it's allowed some of those buyers that were sitting on the sidelines to step in. How long that lasts, we'll have to wait and see. But 150 is the key there. If it can get above 150, then it's got something going. But if it can't break above 150, we could come all the way back down to 130. There's just nothing to stop it here underneath this area that is consolidating in right now. Pretty vertical move there. I would draw the support line right through here. So right around 145. You break below 145, you're probably looking at a test down here around 130. So if we can get above 150 with a follow through day, you've got a print up here around 155. You certainly see likely a test there, and back into clean air. And who knows how far it can go. It'll have to tell us rather than us trying to figure it out. But 150 is the key. I think I would be sitting on my hands on Lennar right now. Let it show that it can break above 150 with a follow through day. Then you're long. If it breaks below 145, you could even look, could it be a pretty decent short? So tight range there on Lennar and potential pretty good trade either direction, depending on which way it goes.
Awesome. Let's check out DK&G, old DraftKings.
Uh, Heading into the playoffs, moving towards the number one betting day of the year, which is the Super Bowl. And then that's followed not too far behind that by March Madness. Then there tends to be a little bit of a lull in the gambling stocks. You can see not much happened last summer. Pretty nice move to the upside. Looks like a huge zigzag pattern here. To me, let's see what this corrective level is. Right at 55%, which, gosh, that gives you a lot of room to run here. Seems like we could pretty easily see a test at least of this November high in DraftKings. And it's a well qualified zigzag pattern, and you got to trust the patterns, which I do. I'm a little concerned about the seasonality here because once we get past the Super Bowl, we start looking towards March Madness, and then there's not much else from the major betting side of things. We look at the DMI, and that ADX is it's kind of non-committal at this point in time. The positive directional indicator is showing that some buying interest has come in with this move. Sellers seem to be waning a bit, but there's no trigger in the DMI whatsoever. On the CCI, we're coming off an extreme point low, which means there's plenty of room to run to the upside on the shorter term. So we came down and tested that August extreme point low there. The CCI would give you some faith that you might have a tradable move at least up to that November high, and then we have to reevaluate and see what happens from there.
All righty. How about one more question and then we reveal the poll results before wrapping up this session?
Sounds good.
Sounds like a plan. All right, let's check out SMCI.
Oh, I'm laughing because I was looking at that one today and actually pretty angry. And the reason for that is it showed up on my search, my impulse search after last night's close on a potential move to the upside today, and it just exploded higher, as you can see, and I just can't chase this move. I wanted to. wanted to go long this stock would have been great with the question, but you can see the separation from the 10-day moving average here. And we're awfully close to that previous wave 5 high, which should act as at least a little bit of resistance. You can see how close we got to that. So we're near resistance. We're overbought short term. What I would like to see, again, Mark doesn't care about that, but I think the ideal scenario here would be some sort of a test back down towards the 320 area. I do think you can stay long. SMCI above 320, no reason to get out. It had a very similar chart to the Nvidia chart with this big, huge ascending triangle, almost identical charts actually, and almost identical results over the past 2 trading days. But an area of potential resistance, overbought. Let's do some consolidating here, backing and filling. But I do think if you like this stock, you stay long as it stays above 320. If it breaks below 320, then we're giving up the breakout. And sometimes triangles give us false breakouts where they make a nice move to the upside and it becomes a bit of a head fake and the big move is lower. Doesn't really feel like that's what's going on here. If we take a look at the volume, once again, above average volume on yesterday's move, followed by well above average volume today. So it's being awfully well supportive. Does not seem conducive to head fake to me. But again, it's overbought right now, and let's let it consolidate a bit. Even if it broke above that 360 level in tomorrow's trade, I doubt it holds it. When you break above a point of resistance, as that previous wave 5 is, and notice that was right at a 61.8% fib extension there on the wave 5. You want it to have some energy and momentum, and if it breaks above it tomorrow, it's too overbought and likely gives it up and comes back down. So rather than go through that, let's do some backing and filling, stay above 320, and take another run at breaking above 360 where it has some momentum to continue that move. But yeah, kind of frustrated with that one myself. Certainly was excited about an entry there since it was on my impulse search, but it just decided it wanted to take off and run too fast.
Alrighty. Well, we did get some positive feedback on the AMD trade as well, so I just wanted to make sure I passed that through to you. We always appreciate when those share their positive experiences. So
Yeah,
without further ado,
that was a good one.
it was indeed. Yeah, that was a fun one. Drum roll, please.
How about that?
Let's see if I hit share results. Can everyone see that on the screen?
We can.
All right.
All right, 1 p.m.
As
is
you
the
can see,
winner.
the overwhelming majority was 1 p.m. I tallied up the YouTube votes as well, and that also kept 1 p.m. in the lead by far. So that will be the new change. So we appreciate you all for voting in and sharing your feedback. It helps us gauge what's going to be most ideal and suitable for you, and we're excited for the changes that are coming in the next week.
He's dealing with some pretty significant weather there. There's some massive storms in Florida, just as we have up here.
How did I cut
So,
out?
yep, you did. Now you're back.
Okay, I'm not sure where I left off, but just was saying that we appreciate everyone voting in, helps us gauge to see what's more ideal for you, and we're very excited for the coming changes in the next week.
Yeah, look forward to it. And I'm glad to see such a significant majority there. People want to see more of the trading day, or the people out west don't want to get up early, one or the other. But either way, I think 1 o'clock makes a lot of sense. I like to be able to talk more about what's happened in the trading day as well. So I would have been happy either way, but glad to see all the participation in the voting, and we're excited to be moving TradeFinder to it's called TradeFinder Live, and now we're going to be live during the market. So it'll be a great show, I am sure. So excited to see everybody at 1 p.m. Eastern time next Tuesday during the market hours. And thanks for joining us in our first TradeFinder of 2024. Promises to be a pretty exciting year. I think it's going to be a great year from a trading standpoint, as I do think we're going to see some volatility and tradable opportunities. So excited about what's ahead of us. So enjoy the rest of your evening. We'll see you next week.